All right, we're going to start today by looking at the home screen on Yahoo Finance. Yahoo Finance is one of the best places for news about the stock market. Um, all right, so I'm going to, right now, this is the beginning of earnings season. All the banks are reporting their earnings. Um, we can see from our meeting notes that I have JP Morgan, Wells Fargo, Bank of America is going to be on Monday. So the banks always start out the earnings season, and um, I have October is green. Green meaning it's typically a good month. So you can see October seasonality wise has been a good month. It's very interesting right now that we're overbought. We've been overbought for over a month. So it's pretty dangerous right now. Whenever the stock market is overbought, there's a lot of momentum. All it takes is one story for us to correct back to a trend line. So that's a good 5% below where we're at now. Um, but don't get freaked out if we do have some kind of bad earnings report and that makes the stock market go down at least to the bottom end of this trend line. But for now, you can see that we're in a well-behaved um, uptrend in a lot of the stocks we're watching, and at least in the S&P 500. Um, so the other things we have to keep in mind, we're going to have the earnings for all the tech stocks coming out the last couple weeks of October. So that's another catalyst for stocks to go up. That's why if you look at this average monthly stock market returns, the quarters that the stocks report earnings are usually positive quarters. So that's why January is a good quarter because the fourth quarter has Christmas, and there's a lot of sales, a lot of economic activity during the last 3 months of the year. In April, I mean, the same thing. So every 3 months, you're going to have earnings coming out, and that's why no, that's my theory of why the stock market goes up at that time. All right, so let's look at some of our talking points. We have 74% of the stocks over the 200-day moving average. That is a sign of bullish momentum, and momentum helps carry the stocks and the indexes in an uptrend. You can see these moving averages. They are a level of support for the stock market, and um, yeah, so you can see that we're above the moving averages on the S&P. So that is a sign that it'll continue to be going up, and it will be probably honoring these trend lines. All right, so let's look at some of our talking points. We have the election coming up. That's one of the biggest unknowns in the stock market. Um, if the Based on who is president, we're going to have a lot of uncertainties um, resolved. So that will help the stock market go up. Um, or there's some presidential candidates and people being elected this November that could cause the stock market to go down if there are negative consequences for the stock market. So we'll have that resolved within a month. Um, we are still overbought. We've been overbought for quite a while, and we have the 10-year treasuries and the 2-year treasuries going up in yield 4%, 4.8%, and 3.3%. That is a lot. Um, so if we look at our 10-year treasury, like we always do, you can see it went up a lot um, in the last month or so. So that is usually hurts the stock market, but right now we know the Fed is going to be reducing interest rates. So we have to keep our eyes on this. Comparing it to the S&P, we had this inverse correlation for quite a while. Now it's turning into a correlation. Ever since we had a drop on October 5th, as the Treasury has gone up, so has the stock market. So we don't have an inverse correlation anymore. Okay, so let's look at some more news in the stock market. We have to wait for this to update. While we're waiting, okay. So we had the banks coming out with their earnings today, and they were better than expected. So if we continue to get better than expected earnings, the stock market's going to power forward. Any big stock that goes down, we're going to have a sell-off. So let's look at Tesla had a robo-taxi event and yesterday, and it was subpar. There wasn't a whole lot of details in what they were going to do, how much, when. Um, there was a lot of ideas that Elon talked about, but they they seemed like they were pipe dreams and they didn't have a lot of detail. And because of that, a lot of the competitors to to Tesla, such as Uber and Lyft, went up 10% after that. And Tesla went down. So we're going to go over that later on. Let's look at, let me see. So the banks, when they go up, that's a good sign that the consumer, they were basically saying the consumer is doing good. And JP Morgan actually said soft landing in their comments. So that is all good for the stock market. That is good for the economy. Um, we don't want hard landings, and we're gonna get some more color commentary on Monday from Bank of America. So that'll give the stock market some more information about how the consumer's doing. Now, let's look at more information. What are we going to do here? So JP Morgan, oh, this news right here says JP Morgan calls it the US economy has made a soft landing. All of the fears of the Fed reducing interest rates too much or raising them too much and going into a recession, all those fears are gone. This is one of the biggest news stories of the month, I think. Look at that. I just found that out right now. JP Morgan calls it the US economy has made a soft landing. That is really big news. So that means the economy is strong. We're not going to go into recession. That means we're not going to dip 15% in the stock market by going into a recession. So they were doing really good in their lending. There wasn't a lot of defaults. So that means the economy is good, consumer is good, and a lot of the companies we follow are going to have some pretty reliable earnings. So that is an awesome news story. Okay, so Boeing files unfair labor practice charge against its union. We're going to go over Boeing later on today. Boeing is in a mess. They have a strike going on. They can't make planes, and they're strapped for cash. They have negative earnings. It They might even be downgraded to junk status by some of the rating agencies. So we're going to go over Boeing just as a stock to avoid. I mean, it has a lot of warts. It has one good thing going for it. They have a duopoly in making passenger airplanes. Um, but the problem with that is if they can't make them uh, with good quality, no one's going to have confidence to order them from them. Okay, so let's look at some more of the news here. We have hmm, okay, we have Lyft going up 10%. We have Uber going up 10%. We have Tesla going down 8%. Okay, that's really good. Let's go back to our talking points. Okay, okay. So let's look at some more of our talking points now. Okay, so I mentioned we're overbought in the S&P, and we're in the middle of earnings season. So far, earnings reports are doing good. So that means we're probably going to gravitate towards the upper end of this boundary, and while the earnings are coming out. Um, all right. So what else do we have to say here? Um, okay. So our inverse correlation stopped October 5th. Now we have a correlation as interest rates go up. Stock market has been going up. I don't know why. Um, let's look at the 2-year treasury. It's the same chart as the one we've been following with the 10-year. Okay. So let's look at the oil. Oil price has gone up 2% this week. Um, let's see. We have a war going on in the major oil producing country. Um, we have the America has produced more oil last year than any country of all time. So we are a net exporter of oil, and we're flooding the market with oil right now. So there's a very good chance we're going to have an oversupply of oil because of um, the way things are going with production in the world. So there's a lot of smart people that are saying we're going to have lower prices than oil next year. Um, but we're not worried about a recession in America because JP Morgan said we've had a soft landing. So that could be helping the price of oil. If there is a soft landing and the global economy is good, then the price of oil goes up. All right, so let's look at inflation. Inflation is down just a little bit from last week. It's 2.44% now, and it's been trending down. The US dollar is up 1%, and gold is down 1%. So let me see, does that make sense? Because gold is generally dollar denominated, a stronger dollar tends to drive gold prices lower. So we had stronger dollar, but gold prices went down. Okay. Didn't correlate that time. So it must have been another reason why gold went down 1%. All right. So dollar index. Dollars has been trending down, but it's still like in a pattern, like a sideways pattern. The dollar against other currencies. Fear and greed index. We are still greeding. Last week was greed, and this week is greed. We were fearful 2 weeks ago, 1 month ago. So we are going from this kind of matches our this greed matches our stochastics, which were overbought. Everyone's excited um, right now, and now we have earnings reports, and they're coming out better. So we still have a bullish mindset in the American Association of Individual Investors. So you have to be cautious, maybe take some profits off the table when everyone else is bullish. All right. So the VIX is now 20. 20 was actually 21. So investors are getting more fearful. They're actually buying more protection now. And because it was 14 about 2 weeks ago. So it's been going up. Um, let's look at our emotional graph. right now where greed is the primary emotion and investors are experiencing. So I guess what is the new paradigm? I guess it's AI. It's data center build out. It's everything related to cybersecurity and perhaps weight loss drugs. Now, we have some major things that could make the stock market go down still existing. We still have the uncertainty in who's going to win elections. Um, if that turns out to be one-sided, such as the Democrats win a majority or the Republicans win a majority, then there's going to be some rule changes. Stock market does not like rule changes. It likes split government when there's no laws passed. That makes it easier for the stocks that we follow to do good in their environments. So, um, NVIDIA, we have the worry about AI stock bubble bursting. NVIDIA keeps saying every week earnings are going to be great. They're alluding to it. They basically said this week that they're sold out of their main product for the next year, um, their Blackwell processor, which is pretty amazing. I'm surprised it isn't going up more, seeing that they basically have been saying demand is insane and um, they're sold out of their main product. Um, okay, so we don't have to worry about Trump action or words until he's actually president. All right, so let's look at some more talking points. Okay, our worst at first. We've been following this since the beginning of the year. The last year's worst performing sectors. Utilities, -8%. This year, utilities is up 23%, one of the best performing. Consumer staples, -3.8%. It's up 14%. Not bad this year. Energy is still a laggard. It's still one of the worst performing sectors. The interesting thing about investing in energy, you probably get a good dividend. One problem with energy is you're at the mercy of the price of the underlying commodity. Even if you have the best operations, you're still not going to do well if the price of oil or gas or whatever it is, it goes down. So this could be our next return to the mean for next year. You know, we have 2 years of underperforming in the energy, and this could be one of the ones that does well next year. All right, and healthcare is up 12%. It was down 1% last year. But the outperformer this year continues to be technology, and that's probably because those have the best earnings, those kind of stocks. Um, and XLC, they have a lot of the same companies as the QQQ. Um, okay, let's review our themes for this year. Weight loss drugs, China stimulus, um, will help the China stocks and American stocks. We have, and this will help actually the global economy. Also, our investing themes are AI revolution, disrupts businesses, build out of data center, cybersecurity, utilities, and demand for electricity are all themes we're following. All right, so sector performance, we mentioned year to date, utilities, communication, IT are the best. Financials after that, industrials, consumer staples. So financials they're up 21% this year. They're actually going to go up more because the earnings are doing really good for the banks. So that's up another 5%. So that'll be 26%, one of the best performings of this year. Um, okay, so let's look at some of the ups and downs for the stock market this year. Today. What is going up and down in the stock market? We have Uber going up 10%. I mentioned the robotaxi was a flop yesterday for um, Tesla. Because of that, Uber is a major competitor, so they went up 10%. This has been on our watch list, and we'll go over that later on. Wells Fargo had good earnings. JP Morgan had good earnings, and they went up too. So Bank of America went up in sympathy. Their earnings will be coming out on Monday, so everyone's expecting Bank of America to do well also. Citigroup went up in sympathy too. Um, all right, so Capital One Financial, a lot of financials in these top 10. Um, and so whenever one couple companies in the sector go up, that brings up the whole sector. Now, Tesla went down because of that robotaxi event. Everyone um, was expecting a lot more, and that could also be a buy on the rumor, sell on the news. So everyone was expecting this robo-taxi, and whenever it came, um, basically the stock sold off. Okay, Broadcom. What other things do we have in common? We don't have a whole lot of things in common with these top 10. Hmm, nope, I can't see a big difference. Okay, let's look at the Nasdaq. We have Mercado Libre. This is one in our screen. Um, this is I think it's the eBay of South America or something like that. Um, so they have their own payments plan. We'll look at their hold on for a second. Our stock screen, Mercado Libre. Okay, so this has been coming up on our list. You can see it has a lot of our important revenue growth, 58%. Cash flow growth rate, 5 years, 172. We have return on equity, 43. Forward EPS growth, 44, 42. But this is the problem. The reason I wasn't interested in its PEG ratio is 1.74. So it is almost double the price it should be. So it's growing a lot, but it's very expensive. So, but it continues to do well. So let's look at some more. Cost goes down a little bit. We have, um, all right, when Tesla was considered to be, it was considered a magnificent seven stock at one point in time. So a lot of times, a lot of the big stocks that are magnificent seven go down with it, such as Apple and Microsoft. So it's like a sympathy trade. When one stock in a sector goes down, other stocks go down with it. All right. So let's look at our top movers in the Dow. Hmm. Amazon went up today. Um, and Goldman Sachs. Goldman Sachs is actually a bank, so they went up in sympathy with the other banks. American Express. Okay. These are all stocks that do good when the economy does well. And let's look at the ones going down the most. Okay, well, I can't say anything from these. All right. So that was a good little exercise. Let's go back to our talking points. All right. Okay, let's look at our Dan Niles picks from the beginning of the year. I can't wait for next year's picks. Um, Amazon up 23% this year. Meta up 65%. Texas Instruments up 21%. Um, and XBI up 8%. So his reason for picking a lot of these were they were out of favor for years. And all of a sudden he says, well, we have some catalysts. We have so K-Web was an example of they were out of favor for 3 years. It's time for them, to be back in favor. Biotechs were down 3 years in a row. Same thing with Texas Instruments. The Texas Instruments had the semiconductors were down, but they didn't recover like the other semiconductors. So that's why he thought that would go up. Meta, he said the catalysts were political ad spending, introducing AI so that they can have a better return for their customers. And Amazon, um, he said that they would benefit from advertising for the um, election, and he said that they would actually do well if there was a recession, but we wouldn't actually have a recession. So that we're going into next week. We had earnings this week. Next week we're going to have um, Progressive. These are some of the most important ones. Progressive, Citigroup. We're going to have Bank of America, um, Tesla on Wednesday, and CSX. This will tell us about how good the economy is doing by the number of freight cars that are shipped. We have TSMC. They'll tell us how many chips they're making for their clients, and that gives us an idea how NVIDIA is going to do, and Apple. In Netflix, they're a stock that shows up regularly in our screens. You can see that it has 24, 32, 34. They're growing at like 25 to 30%. So they're going to, that's a major influence in the stock market. If they go down a lot, then the stock market will go down that day. American Express will have tell us how the consumer is doing on Friday. Then the week of October 21st, we're going to have a slew of tech earnings. We have Alphabet, Microsoft. We have, hmm, what other ones are important? Apple and a lot of the other tech stocks are going to be reporting in these 2 weeks. So that'll and Amazon and IBM, T-Mobile. So a lot of the stocks we're following are reporting in 2 weeks, and that's why I have green, for these for October because a lot of times good earnings catapult the stocks. And we know from the banks already, from Wells Fargo and JP Morgan today, that the economy is doing good. We've reached a soft landing. We're not going to have consumers not buying things. So I think in general, we should be in good shape for earnings season. Okay, here's a story about Boeing. Boeing would be the biggest ever U.S. fallen angel if cut to junk. So on Tuesday, the rating agencies say they're considering downgrading Boeing. We've been highlighting this as a stock to avoid all year. The downtrend in this stock is just major. This is one of the worst charts in the stock market. You can see it's making lower highs and lower lows. Um, and there's no catalyst right now for the stock to go up. They have a strike. They're not making a lot of airplanes now because of people being on strike. They're running out of money. There's a cash burn right now. So this is an example of um, a stock that has a lot of warts or fleas or whatever you want to say. There's a lot of problems for this stock. I like to avoid stocks that have intangible issues that can't be resolved right away. If we look at the earnings on Boeing, you can see a lot of negative quarters for the past couple of years. Um, and there's only so much that you can, so much time you can exist as a company having negative earnings before you go bankrupt, basically. Um, and it's, we have forecasts of um, increasing earnings. Um, but the problem is these could easily be negative if there's a strike or if they have quality control problems where they have to um, cancel orders or something like that. So this is just, I'm going over this as an example of something to watch out for and to avoid. You can see that some of our um, metrics that we use, they have a $92 billion market cap and the total debt is around 40 billion. So half of their market cap is in uh, is is in debt. So let's look at the PEG ratio is 6.53. So it's 6.5 times overvalued. Profit margin is negative. Return on equity is non-existent. So we have a lot of negative numbers, quarterly growth negative, um, and a potential for canceling orders. They have an order book that goes out 10 years. They pre-sell airplanes and they're really behind in making them, and they might get some of those canceled. So it's just a situation where I'm avoiding it. And CFRA says sell in their recommendations. And they say our view is sell. BA faces quality control woes, regulatory scrutiny, high debt. The only positive thing is it's one of the two major providers of commercial aircraft in the global market. How much that's worth, I don't know. Um, they just have too many problems. They have a cash burn of $4.3 billion in quarter two, 8.3 billion in H. How long can you go losing money before you go bankrupt? That's why the rating agencies are going to rate them probably junk status. So that's a pretty scary thing. They could go out of business if they keep having problems like this. Um, okay, let's look at some charts of interest. We see a sector, the XLY sector, consumer discretionary sector is, you see, let's look at Procter and Gamble. You can see that they've been in an uptrend for quite a while, over a year. Um, they're at the bottom part of their trend lines, and they're oversold. So, and their earnings are coming up pretty soon. So if they have good earnings, that'll go up. Otherwise, they might break through this trend line and go down. But I own this stock for a dividend. It yields like 2 to 3%. So that is pretty decent dividend. The theme for Procter and Gamble is that they're selling off unproductive, not units that are not as profitable as other ones, and they're investing in the products that they have a really good moat and a really good profit margin for. For instance, they're advertising a lot for Tide right now, and they got rid of some of their cosmetic parts of the company that didn't make as much money. All right, so let's look at this news story was on the front page. Tesla unveils its Cybercab, Robovan, and more. So the takeaways from this event was we're going to have some fully autonomous driving coming to Texas and California by next year. So a lot of what they were announcing is going to happen in the future, and Elon Musk is very rosy-eyed, rose glasses, or I don't know what you want to call it. He's very optimistic, and a lot of times what he says is going to happen doesn't happen. So that's why it sold off today. Um, the interesting thing about this talk that I saw was they showcased a Optimus humanoid robot. Elon Musk says it could be the biggest product ever of any kind. It's like having a rosy robot like in the Jetsons doing all of your chores for you. And he thinks everyone's going to have one of these, and it's going to cost around 20 or $30,000. And people might have more than one of them. And um, he said it could be ready by the end of next year, which is pretty amazing if this turns out to be an actual product. Um, but Tesla sold off on that. So just this is one of those breadcrumbs you keep in the back of your mind. If Tesla sells off, keep in mind that they're going to have this biggest product of any kind for sale at the end of next year. And that could be a catalyst for it to be like a totally different company. but that could be like one of Elon's visions that doesn't come to reality for a couple of years. We don't know. Um, but if you look at their forward PE is 78, growing at 32%, so they're 2.4 times overvalued. So it's really hard for me to get interested in buying the stock when they're so overvalued and um, they missed a lot of their estimates. You can see they missed, that's red means they missed their estimates. So they're not very good at predicting what what they're going to be doing in the future. So that uncertainty is why the stock is going down today. You can see that their PEG ratio, Yahoo Finance thinks it's overvalued too. They think it's 3.5 times overvalued. The profit margin is good at 13, and the return on equity is double what we want at 20, which is good. And their cash, they have 15 billion in cash, which is good. They don't have any debt. So it's just they're overvalued right now. If they went down a third in price, I'd probably buy some. Um, okay, we had some more hints. These are breadcrumbs we're remembering about um, NVIDIA. Meta platforms, they gave a hint that they're buying as much as they can, of NVIDIA's chips. And um, we had Jensen Huang say that the Blackwell chip demand is insane. Just this week, that they said that they're sold out of their main Blackwell chip, which has high margins for at least the next year. So they're sold out for the next 12 months or so. That means that if you order now, you're not going to get them shipped until the end of next year. So there's no lack of demand for the product. Um, all signs are pointing towards, that they're going to do good in the next earning report. And they have the Hopper line that they still can sell. So let's look at, and this analyst said they have a pennant formation. So it says the stock recent breakout from a multi-month bullish pennant chart pattern. So we can see that we have this uptrend with the black line, but I drew this pennant that they were talking about. You can see this, it's like a flag. It was going down, and whenever you have lines going down and up, and you reach this point right here where you either break out to the down or break out to the up, and it broke out to the upside. So that's what they mentioned there. They said that's a bullish sign, and they said that there could be a rally above 170. So that's really interesting. We'll follow that. Um, but let's look at their earnings projections. Um, I did the earnings projections from this year to the next year. They're going to double their earnings, and I would think you could demand a higher price to earnings ratio if you double your earnings. But right now their PE ratio is 30, 34, and they're growing at 34% or more. So they're fairly valued. So there's no bubble here, really. The question is, how long can they keep selling at this price? And right now we had some news from AMD. They might have a competitive chip, but it isn't as good. So how long can they keep selling at this 70, margin of 70? That is pretty amazing. Um, so we'll see. Right now there's an uptrend, and you can see this is a super look how these earnings projections are up in a straight line. This is exactly what we're looking for in a um, growth stock. All right. Um, okay, so there's an article here. Um, it said, is Schlumberger SLB, it's named SLB now, the most undervalued large cap stock to invest in now? I said, wow, that's interesting. It's an oil drilling stock. So they do a lot of the servicing for oil drilling. They're one of the largest in the world. Um, I looked at their earnings projections, and it seems like they're growing around 11% if you average it out. If it made 15%. So their forward PE is 11. So if you divide 15 by 11, that gives you a PEG ratio of 0.73. So they're discounted about 25% from their fair value. So they should be trading at 33% if they continue to grow at this 15% rate. And that's pretty consistent. You can see that they're growing at least, around 15%. And if the price of oil goes up, right now it's the price of oil is down. So if the price of oil goes up, that helps them a lot. Um, so the stock is in a major downtrend right now. You can see SLB is very close to how this chart of oil looks. And right now, between 60 and 70 is kind of a low for oil. Um, a lot of a lot of oil companies, they decide whether or not to pump oil based on the price of oil. And if it gets low enough, like in the 60s and 50s and 60s, it makes a lot of sense to turn some wells on. So right now we have a potential of oil, the price of oil going up, and the oil, the energy sector has been out of favor for 2 years. So that's another, that's something Dan Niles will look at as a catalyst for an oil-related stock. So it's interesting, but it doesn't have a whole lot of, um, has a discount of 25%. It probably has a big moat because there's not too many companies doing oil servicing like this on this scale. Um, so it doesn't have too much of um, a cushion for me. And on top of that, you're at the mercy of the price of oil. So a company like Microsoft, they're not dependent on a major commodity for, execution of their business model. Um, but whenever you invest in oil companies, you have to be willing to take it, understand they're going to go down when the price of oil goes down. Okay, let's look at the statistics for Schlumberger SLB. Its market cap is 63 billion, and they have total cash of, if you net the debt, the cash and the debt, it's around 38 billion, 35 billion in cash. So almost half of their market cap is in cash, which is pretty amazing. So they're not gonna need to borrow money, and they could probably buy back stock too, or make acquisitions. So their profit margin is 12, and their return on equity is 21, which is 22, which is pretty good too. Overall, I'd say it's interesting. If it went down in half, I'd buy it. All right. So I did a screen um, for on Fidelity, and of course I made the top 25. This is a list of like, let's look. It's a list of like 100, 200 stocks. So the top 10% I made green color for the peg ratio. So for instance, the peg ratio with the lowest peg ratio, I put green. The next 10%, I put yellow. And what I do every week is I look, is there any interesting, look at this green on this one right here. So it's growing 40% basically, but its peg ratio is 1.74. So this is an example of a stock that's, it's a little bit expensive, but it's still growing a lot. And that could be one of the reasons why it's up today. I don't know. Um, we've had a couple, we have Uber we've been following for past couple weeks on this screen. You can see it's growing at 50%, long-term growth. Return on equity is 18. Re Revenue growth is 27, um, with a PE of 34. So it's grown around 30%. And it's 1.82 peg ratio. So it's a little expensive. Um, Progressive. People were worried that the hurricane would cause them a lot of claims, but the hurricane was less damaging than expected. So that could be a catalyst for this stock to go up. Um, all right. So you can see that some of these stocks on here, JD and PDD, are Chinese related companies. That's why they're down um, and maybe out of favor. All right. That was a good super micro. They have a lot of news headline risk. Um, but they are like one third the price that they're growing at. So but there's some government agencies looking into their finances, so that could be sketchy. All right, that was good, interesting screen we had there. I thought it'd be interesting to go over PDD Holdings. They're a Chinese company, but they were originally founded in China, but they moved to Ireland, so they're not necessarily a Chinese company being controlled by China anymore. But they're basically in that sector whenever it goes up and down for some reason still. So they own the company Temu. If you ever see some of the advertising, so it's a very popular um, destination for people in America. Uh, the interesting thing about Temu, I mean this company, is they have more cash than market cap. Their market cap is 196 billion. Their cash is 286 billion. I've never seen that before. Their PE is 10. They're growing at 20%. So they're half off. Their price is half off right now. So their real price should be around 285. So I guess if it wasn't for being lumped in with all these China stocks, this would be selling for a lot more. Let's look at their statistics. Their 200 billion market cap, they have 270 billion net cash. And the return on equity is 50%, which is four times what we're looking for. Profit margin is double what we're looking for at 26%. The PEG ratio, according to Yahoo Finance, is 0.46. So they agree it's half off. And the forward PE is 10. So this is an example of a stock that I'm like, all these things are lining up. The only intangible is they do have a subsidiary in China, and they might be a little bit controlled by this Chinese government. So that is the only thing I can find wrong with this company. Um, so this is an example of stock that I would buy a little bit of right now. And if it goes down on news from the Chinese, I buy more. As it goes down every 15%, buy some more. And that's how I establish a position. Um, but yeah, the intangible is it's dealing a little bit with the Chinese government. So maybe there's some headline risk there. Um, that's about all I had to say for today. Well, I hope you enjoyed this, and I hope you have a good um, rest of your investing week, and I'll see you next time.